I'm Charlotte McLeod with the Investing News Network, and here today with me is David Morgan of the Morgan Report. Thank you so much for being here online with me once again. Great to see you.
Yeah, it's great to see you, Charlotte. It's been a while, so thanks for inviting me.
Yeah, it's been a while. So before we jump into what's going to happen in 2022, I want to take a quick look back at last year. I know a lot of people were hoping that silver would get over the $30 per ounce level last year. Didn't happen. So I want to ask you, did its performance in 2021 surprise you? How are you feeling?
Yes, it did surprise me. The beginning was so robust. Two of the major silver trusts or ETFs actually changed their prospectus. And one, it mentioned that they felt the silver supply is very tight. And I really thought with the Wall Street push that things would be strong through the beginning of the year, which it was, and would probably fall back, and the commodities trader call it back and fill. In other words, build an even stronger base at a lower price, and then I wouldn't say shoot up from there, but I did expect, the $30 level to be hit several times during the year or beyond, and it did not really happen. And it tailed off into the end of the year, as you know, rather disappointing. So no, it didn't do what I expected. I mean, I do change my parameters as the more data comes in. It isn't like I was saying 30 the whole time. I did acquiesce to what the probabilities were. The probabilities were it was going lower, and it didn't make a lot of sense. It still does it in a way, and I don't want to be stubborn, but I do want to see the facts, and the facts will be out probably in April, May with the two major silver studies. I'm very anxious to see what the industrial use was, but primarily the investment, because 2020 was a record-breaking year for investment on both the institutions and retail. If that's matched again in 2021, and I'm not saying it is, I don't know, but let's say it's very close to what it was in 2020, then things just don't add up. That would mean, another year of record investment demand, and the price goes from roughly the high 20s down to like 22, 21.50. That doesn't make sense. So I'm not predicting that. I don't know. And I'll say it again, I was somewhat disappointed. But, if you take a longer term perspective, the 2020 move in silver was the best performing asset for the year in 2020. And we had a bad year in 2021, but 2 years doesn't make a market. I'm still longer term bullish.
Okay, so again, we're going to come back to a lot of the things that you mentioned. Before we do that, I want to get your sense of what's going on in the overall markets, because there's been quite a bit of upheaval recently. And a lot of people that I speak to tell me, this upper momentum in the stock market can't continue. What's your take on the path forward that we might see in 2022 in terms of the overall markets?
I think I've had one interview before yours that asked that question, and my answer is the same now as it was then. There's going to be huge distortions across all markets, meaning the bond market, the stock market, the metals market, the crypto market, and I'm adhering to that. So I'll expand somewhat. Stock market, I've been somewhat off on. I've been calling, that this is overvalued for a very long time, and we're in a distribution phase where the smart money gets out of their positions, and they do it quietly, a little at a time, so they don't disrupt the market. And I really expected to see the stock market sputter before now. However, I'm pretty convinced that now is the time. The reason I say that with some authority is that we've seen the advanced decline line deteriorate, meaning very few stocks are advancing. Many, many, many are declining. The only reason the averages look so good is the way they're weighted. So if you want to control the perception that things are good, all you have to do is buy in a leveraged fashion certain brand name stocks on the Dow or the S&P, and you can make the index look good, even while the truth is that most are doing quite poorly. Now we have some of the stars falling, like Facebook and some of these other ones that Facebook that have dropped precipitously. And when that happens, when you see some of those leaders, like the FANG stocks, Facebook and Netflix and Google and all that, we're seeing, I think, the idea that I'm right, finally, that the stock market's due for a correction. And I think it could be significant enough to scare a lot of people.
Okay, well, thanks for explaining that. And of course, in the mix there, we have what the US Federal Reserve is doing. There's a lot of plans that are in the mix right now. They want to do their tapering, they want to hike rates, they're looking at their balance sheet. Could I get your take on what might actually be possible for them to do in 2022 and what impact that may have?
Yeah, I'm going to take kind of the devil's advocate position with you, Charlotte, just to explain that one, no one really knows. And almost all of us are thinking the same. And one of my favorite expressions is when everyone's thinking the same, no one's thinking very much. So I'm going to take the contrarian view. Most of us will say, well, they really can't raise interest rates very far. It's going to tank the stock market and it could affect the bond market. And so they'll back off, similar to what has happened in like 2016. I am taking the position that what if they want to crash the market? What if they do want to see degradation in the bond market? So if they were to follow through with this hawkish stance that they're talking about, what you would see is they're selling a bunch of bonds to off their balance sheet to clean it up, to mitigate it. At the same time, there's a bunch of treasuries out there that have to be rolled over. I digress, the movie Rollover, where you have to keep expanding the money supply to be able to buy this ongoing debt fiasco. So if that were to occur, it looks like it could, then you're going to have a bunch of selling, which means where the buyer's coming from. And the only way you're going to entice buyers to hold something that doesn't have much value and certainly doesn't pay anything above the real rate of inflation, you're going to have to push interest rates up. Of course, as we all know, when you push up interest rates, the bond prices or the value of bonds comes down. And anyone that's holding the US Treasury market from the T-bills to the long-term bond is going to be saying, I don't know about this, what's going on in the bond market, which is really the keys to the kingdom, as I've always said, because the debt credit markets are the lifeblood of the entire economy, almost on a global basis. I say almost, because Russia and China have done separate deals. The BRICS have kind of mitigated their exposure to the US dollar, and many other countries have tried to mitigate it. And of course, you've got the crypto space, which purportedly helps you mitigate away from the US dollar. But having said all that, the truth of the matter is the dollar is still the lead reserve currency. And if it starts to falter in confidence, in trust, and the interest rates get pushed forward by the market, not by the, let's say, the algorithms that are running everything currently, we could see a disruption. So I'm going to take that side, that that's a possibility. Am I predicting that? Not really, but somewhat. I know I'm talking out of both sides of my mouth. I am more of the stance of something big is happening. The central bankers know what's going on. They are not stupid. They might on, public display say things and talk in terminologies that are not very easily grasped by the general public, but they know all fiat fails. Now, there's very few at the high levels that don't know that. The whole thing is they need to pretend that they have it all under control. And the last thing they want is for someone like, not me specifically, but the truth, those of us that have said it, which is almost everybody who interviewed, to wake up to the point where it actually has an effect on the market. And markets have a mind of their own. And so I'm saying that maybe they are planning to take the dollar down where they think they can control the demolition and then move us into the next phase, which it looks to me very, very much, and many others, that they want basically a central bank digital currency, and they want to end the cash system.
Okay, I appreciate you going down that more contrarian path, because we don't really get to hear that side, or at least I don't among the people that I've been speaking to recently. So taking it a little bit further, how would you be preparing right now for, this possible situation, and also keeping in mind the other possibilities that are out there for us to go?
Well, the best place to be in an inflationary environment or a deflationary environment is to have low debt. And so, you want that as a business or as an individual. You want, if you possibly can, your house paid off, or your rent with 6 months worth of rent in cash. I'm not a big cash guy, but you want the cash, you don't want to mess with it. So you want low debt, you want to be able to live within your means if that's possible for you. And with an inflationary environment, food prices skyrocketing, I understand that's not true for everybody. But if you can, that's step number one. Be as debt free as possible. Step number two is to, when in doubt, stay out, meaning only hold the best of the best companies. Stock wise, you want basically stocks that are needed, like utilities. Everybody's got to drink water, everybody's got to have electricity. I like the energy sector, but most of the oil companies are borrowing money to pay dividends. That's not a good practice. You really want to stay away from most of those. Of course, gold and silver are the bedrock that I've said, since I first met you. And you can overdo it. You don't need to have too much, but you need some. And the right amount of some varies person to person. Rule of thumb, 10%. So if you got gold, you've got cash, you've got really high quality stocks that do well in a deflationary environment, and you've got real estate that is not over leveraged, I think could be in good shape. And if you're at the lower end of the spectrum, I would just save what I could, cut my expenses if possible, and maybe downsize. There's nothing wrong with getting rid of some stress in our lives, where maybe that apartment that you're in that you love and always dreamed about is just stressing you out. It's hard to love it when all you think about every month is how you're going to pay the next rent check. So, there's a lot to be said for obviously what I've stated, which is all common sense.
Okay, I think now we've got a pretty good idea of what's going on in the overall market and some steps people can take to prepare for the future. I want to go back to silver specifically now and take a look at the market. We're about a year past when we had, the first silver squeeze activity going on. I know you touched on that briefly. I just want to ask if you think that it's had a lasting impact on the market and what that looks like to you now that we're a year on.
Wow, that's a good question and a tough one. The truth is, I don't know, but I highly suspect that the Wall Street silverbacks are just that. They really have dug into this market more than I thought they might at the very beginning. I think it wasn't necessarily bad, but I thought a lot of young people that are coming up to speed on basic economics, and some adhere to the Austrian school, and a lot know that you can't print yourself wealthy, and so they've had much more of a persistence to them than I expected initially. So that's a great thing. And I think they're looking longer term. When it came from basically the Wall Street Bets group, and it was, this GameStop situation that got in my head. And I looked for a short squeeze situation and what they did, and thought they were all, I didn't think they were all, but thought the majority were short-term oriented. Silver is a whole different situation, but much more powerful as things continue down the road that we're talking about. So I'm pretty pleased. And I think they're at some rather huge level as far as followers. So, silver is not the answer to everything. I never said it was, but it is the most undervalued, needed commodity. And I just might digress. I think you've got a question coming up, but you asked me about silver in 2022. I'm writing an article for a magazine article in the United Kingdom, and I called my title, Charlotte, you might like, and your viewers might like to hear. It's called Silver in 2022: Essential, Critical, and Irreplaceable.
Right. And let's talk a little bit more about that, because one of our most popular interviews of last year was the one that we did about where you were telling us that Tesla and Elon Musk should consider starting to think about securing their supply of silver. And since we had that conversation, I've had other people say similar things to me, not just about Tesla, but about other large companies that require silver. So I wondered if we could get your updated thoughts there, and maybe it ties into what you've been working on as well.
Yeah, great. Thank you. Yeah, I was going to read from some notes here. Some of your viewers may have heard this before, so excuse me when I'm not looking in the camera, folks, but I can't read and look in the camera at the same time. So I talk about talking about silver's past industrial use was about 35% of the market 2 decades ago. Most surprisingly, the total silver supply due to mining and recycling at the time was 550 million ounces per year. Now the total is nearly double. Our mining and recycling is about 1 billion ounces a year. So do some calculations. Silver demand from industry alone went from 35% to over 50%. At the same time, silver's production doubled. So we increased from 35 to over 50%, and the supply during that 20-year time frame doubled. This would be the equivalent to a stock issuing shares at twice as many in 20 years, yet the must-have buyers continue to increase their purchases. Perhaps a better illustration would be this. Imagine that the total silver supply remained where it was in the year 2000. So as a reminder, that'd be 500 million ounces mined. This means the total silver supply, 500 million per year, and industrial demand went to where it is in present day numbers. That would say that all silver available would be used in industry, leaving zero available for silver jewelry, silverware, or most important of all, silver investment. So I think that pretty much sums it up. I talk about, silver is used in over 10,000 industrial applications. It's the most important element, but the most important commodity is oil or energy. And then maybe a few more things here. I'm looking at just a little, have had a busy week so far. So I talk about Matt Watson, who is the president of Precious Metals Commodity Management. Kitco's interviewed him. I don't know if you had him on your show yet. I would recommend that. I can connect you if you don't know how to get a hold of him. But he's a very good researcher. And what he says is that he predicts that by 2030, 85% of the silver market will be used for industrial purposes. How much will that leave for investment, I ask? Not much, I say. Matt goes on even further and states that, and I quote unquote, there is not enough silver in the ground to last 20 years, end quote. If there was ever a legacy investment for those that want to leave something for their estate, endowment, foundation, alumni fund, or their family, silver would be about the almost only guaranteed investment. So I know it sounds super bullish. I know it's David Morgan. I know. But you know what? Facts are facts.
Yeah, and maybe now that we have an idea of those demand numbers, which are very interesting, you can talk to us a little bit about supply, because silver supply is kind of innately tricky because so much of it comes as a byproduct of other metals. So can you fill us in on what we saw perhaps in 2021 and the supply situation looking forward in 2022?
Yes, great question. It is tricky. It's hard to answer. Since I'm on the mining side, resource side for resource stocks in general, I do a lot more than just silver, but that's my first love. There are some pretty good sized deposits out there for silver that I'm well aware of that have been delineated. They're not just, some geologist fantasy. They're in reality. But just because we know they exist, it's a difference between we've got the goods and getting it above ground and getting it refined. So there's that part. I think 2021 will show some increase over 2020 due to what happened due to the illness in 2020, but I don't think it's going to be significant. It's going to, when you're talking, billion, still a pretty big number. And so to, 1% move on a billion is a pretty good number. So I don't expect to see silver supply increase much in 2021, more than maybe 1 or 2%. And it's been flat for 5 years. It's been up and down, and mostly down over the last few years for a variety of reasons. The grade seems to be diminishing overall from almost all the silver miners. There's some, again, that have not come into production that have some pretty high grades. And Mag Silver, I own it, disclosure. I own Mag Silver. I like it. We recommend the Morgan Report. They've got a great deposit and a long mine life ahead of them, and they've been in production now for a short time. So there's one to think about. I don't see the byproduct side being as strong as it was, because 70%, as you know, Charlotte, is lead, zinc, gold. And I don't think we're going to see the demand for lead, zinc as much as we had in the past. And the reason I say that is this huge contraction we're seeing across the board in the global economy with what's going on in the food supply chain and all that. I just don't see this huge build out of anywhere. I don't see China building many more ghost cities. I don't see the infrastructure plan in the US really getting on track for what's needed, like, fixing roads and bridges and, highways and public transportation and that type of thing. I think a lot of it is just going to other places. So I think that the contraction will be lead, zinc, and copper's a different story. I mean, I know the bullish case of copper. I like copper. We feature copper. We mentioned many companies that we like, but I'm still a bit on the fence personally. Not so much my number one analyst, David Smith, who's independent of me, and that's one of the reasons I hired him. Is I like, again, everyone's thinking the same. It's got to be like this. No, you tell me what you think. But I do not see, again, a robust economy. I really don't. I see the stock market finally catching up with reality. And the reality is that we've been deteriorating on a global basis for quite some time. And I think the stock market is going to reflect that. End of the world, no. Is it doom and gloom? You could call it that. I'm calling it reality. All things cycle up and down. I mean, look at yours truly. I was young and handsome at one time. I mean, all things cycle. And that's the global economy as well as it.
Okay, so on that note, what about substitution that's in the silver market? Because, if you have demand, supply, no real fireworks on the supply side. We have demand that could become much higher. You can either pay a higher price or you can find something else to use. So what role do you think substitution will play in silver moving forward?
That is probably the best question you've asked, and you've asked several good ones. So the reason I titled it the way I did, Silver in 2020, essential, critical, and irreplaceable. The irreplaceable part comes in where you can't substitute silver. Now, that's a bit of I wouldn't say it's a lie. It takes some explanation. So for solar, for example, and I stay on top of this stuff, as you know, Charlotte, it's my job. There was, and I haven't seen any follow through, an article I put out in the Morgan Report in one of my videos I do for my paid members on a test that's been done using copper, claiming that they were getting similar results on their copper-based solar panels to what silver did. And we all know copper is substantially cheaper than silver. And if that is true, more power to them. That's fine. There's not enough silver to power solar panels to give enough electricity to all the houses in America. So how are you going to power the world with solar? You can't. So that's one, but I haven't seen any follow through yet. The basic truth is there's really no substitute for silver in almost all applications. The few places you could substitute would be substituted by gold, platinum, palladium, which all cost more than silver. So it's uneconomic to substitute those. You can substitute aluminum in some cases. I mean, there's aluminum mirrors out there, but they're not nearly as high quality as silver. You could put copper in a smartphone, but the reliability would be so poor that you go out of business. So in almost all applications, substituting silver just doesn't exist. Now, what does happen is what's happened in the PV, the photovoltaic world, solar panels, and that is you continue to use less silver per panel and still get the same result. And that's been done over the last decade. In fact, it's really been cut close to in half. And more power to it. I'm all for what they call thrifting, or getting the most bang for the buck, or making it most economically viable. And that's fine, but I think they're kind of at the end of that now. I don't think they can squeeze it much more. Of course, as I said, if this copper panel works as advertised, then that's a whole different ballpark for the solar industry. And again, I'm following that story closely, haven't seen anything other than this one article. So there's always new uses for silver too. And with the 5G phone, that's going to take more silver. With the solar panels technology that we currently have and the push for more green energy, that's going to push it. Automobiles, just ICE, internal combustion engines, use more silver. Why? Because everyone's got a flat screen on their dashboard somewhere that they've got, backup camera, they've got, playing DVDs or whatever, uses more silver to have the electronics in your automobile. Not counting what happens in the electric vehicles, which doesn't take as much silver as some purport, but still takes more than an ice engine or an ice engine automobile. There's probably a few things out there that we don't know about yet, that will demand silver as the only element that is, again, essential and irreplaceable to perform the function required. And there's a few out there, since you asked me, that would have basically dried up the silver. One was a wood preservative. That was nixed because once someone did the calculations, it's like doing the solar panel calculation I did. It's like there's no way there's enough silver to paint all these what they call them, docks that are in the water around the world with a silver paint that would preserve them. Same thing with superconductivity. I mean, superconductivity is a wonderful thing because you have zero line loss. You don't lose any power from the coal plant or oil plant or solar plant or uranium plant to the main substation and substations after that. In other words, a zero line loss. So that's like getting a 30% efficiency increase just by using silver wire. The problem again is there enough silver to put that many wires across the grid? The answer is not really. So there's been things in the industrial side that basically never took place because not the cost. The cost, silver is really undervalued for many reasons, but one of the ideas that it might be good for this or that, which would be truthful, could not be implemented due to the fact that it isn't in that big of an abundance to perform the function as it would be required.
Okay, that's quite interesting. And there's a lot of things for people to keep an eye on there. As we're coming closer to the end here, I want to take you back to the silver squeeze once again, and not to harp on about it, but when we were first talking about it last year, one of the things that you told me was it's great to see the physical buying and people interested, but the paper market was in the driver's seat, and that's why it's a little bit hard to actually see price movement from investor buying of physical silver. And I'm bringing this up just because I know this is something that frustrates people. We get comments about it all the time, and I can only imagine that you do too. So maybe just to kind of conclude with your thoughts there, and if this is something that you see loosening or coming to an end at any point.
I think it will come to an end at some point. And I know people are very frustrated at hearing that, but it has in other commodities. I mean, there used to be an egg market, a milk market, and they really discontinued those due to problems. And it's just what's called a cash market. I mean, there's still eggs and milk in every grocery store or most gas stations. So it'd be the same thing with silver. I'm really surprised with the other white metals, with platinum, palladium. They are such thin markets, such small markets, such tiny markets, that having them on the futures exchange is, to me, not a good idea. But palladium has kind of shown us that it works, because palladium's gone from roughly 200 to 2,800 at one time, and now it's in about the $2,400 level. Well, that's about a 12-fold increase, and it has maintained that price above 2,000 for a long time. The answer to the question of how or why is because the physical market really is controlling that price, because it's such a small market and its demand is so high with catalytic converters that there's really not much that could mitigate. Plus, another factor that most may or may not think about is where's the supply come from? And it comes from a non-New York bank controlled arena, which is the USSR, or Russia, I should say. So those factors all add up to bring you really what I consider to be a fair paper price for palladium. Now in silver, it's a different story because there's so many players. It's, one of the problems with silver is that 70% comes from byproduct production. So a large zinc or copper miner, a conglomerate like BHP or RTZ, they look at silver. I did this analysis years ago, but I'm sure the idea is still correct. And, I looked at silver going $100 an ounce and saw what it do to their balance sheet. It's hardly noticeable because they mine so many other metals. So to them, silver is just something that's kind of a rounding. They don't really care about it, even though on aggregate they produce a lot, but they're such a big mining conglomerate that they mine so much other stuff as well that silver doesn't play that key a factor for their business. And that's a problem, because if you don't care about a commodity and you use it to swap or trade or give it to the bullion banks to play with it or whatever, it's obviously not as highly prized as, let's say, First Majestic, whose lifeblood is basically the silver market, or maybe a dual market like Hecla that's basically a gold miner, but it has a lot of silver in it, that type. So the main idea is that all manipulations end. I think that we've seen a lot come off the registered category in the silver market since the silverbacks arose. And I'm watching that very carefully, like many are. And I just think with this whole financial system being as convoluted, strained, and unreliable as it is, again, the bankers are well aware of this, that the new system, however that manifests, hopefully it's more toward, we the people, but regardless of the outcome, I think the outcome will have a better, by nature, in other words, it's going to be forced upon the bankers to be more legitimate of the true value of things. And this is what we're going through right now, Charlotte, is, like, what's the true cost of food? Well, it's gone up. And why has it gone up? Well, because it takes, energy. And what's happened to energy? Well, oil's $100 a barrel. All these things are interconnected, as you well know. We cannot put ourselves out of this. We've tried for years. It's sort of worked. And now, as it says, we've come home to roost. We've got to pay the piper. All those expressions that we can only go so far without facing reality. And we're here. We're facing reality now. So I expect more distortions in the market. And I won't summarize what we already talked about. But again, not the end of the world. Really, in a way, it's better to shake everything out and the chips fall where they may. And at least you know where you stand. Trying to sit here and outguess them is really frustrating, especially when you know certain facts that seem to be counterintuitive to what you might see on a price of something, for example.
Okay, I think people will appreciate those words and that perspective. I think we can end it there unless you have any final thoughts on silver in 2022 that you would want to share with the audience before we head into the rest of the year.
And one more, people always want to know what I think the price will do. I just finished the report last weekend. I'm doing it from memory, but most of the banks thought that silver would outperform gold on a percentage basis. And I think the most positive price on the bank analyst was somewhere around 33, if I recall correctly. I'm sort of in that camp, but David Smith, as I mentioned earlier, that's our chief analyst, he wrote or did an article and an interview about $50 silver in 2022. One of our members wrote and said, why is it different? Why is David? Because he's independent. And so he wrote a great piece for this particular subscriber that I published for our premium members, our paid people, on why he thought it was 50. So I'm not changing my mind, but I've said for years, it's going to be this unless the caveat, that black swan or that anomaly, that tipping point, that run to safety, the safe haven status, all those things that could happen in overnight, literally. You can't rule out, especially the closer we get to the proverbial end of the road. You kick the can and now you've kicked it and it doesn't go anywhere because we are at the end. That's a good metaphor. And therefore, once silver gets above 33 and it stays there for 3-4 days, or better, even 2 or 3 weeks, there's not much holding it back to hit 50 again. And it'll probably sell off at 50 and come back down, and all the naysayers will go, see, silver can never go above 50. And they'll convince themselves, and it will regroup and it will shoot through 50 finally. Now, once that happens, then we're in a whole new ballgame, because now Elon Musk will be phoning me up and asking me, hey, how much silver can you get for me? I'm trying to end on a humorous note, but you get the idea.
Perfect. Okay, always great to end on a price outlook. Everybody loves that. Thank you so much for being here to talk about what's going on in silver. It was great to have you.
Thank you, Charlotte.
Okay, and once again, I'm Charlotte McLeod with the Investing News Network, and this is David Morgan with the Morgan Report.